Hey, hello, this is Martin from Secrets, the channel for learning about trading and investing. Welcome to Markets Tomorrow, the daily technical stock market analysis show where we quickly look at the charts and try to understand what happened in the market during the day and plan for a better trade for the next day. So that's from January 3rd, Wednesday 2024 tomorrow. So we had the beginning of a correction, for sure. It happened especially on the Banknifty. But it's the first day. Is it going to extend further? Or is that it? Let's get in the charts. We'll come back to this wrap-up screen. Before that, we will check the candlesticks. So first Nifty. This is a bearish candle for sure, but it looks more like a hammer almost because of the recovery that happened after it made a dip. Right. That's more than 1% of retracement from the previous swing high of 821,830 nearby levels. It was very close to the 22K. That's when market decided that we'll take the 22K later. Before that, we'll retrace. That's what happened today. But it was more evident on the Banknifty, which had a solid white range bearish candle, and it's almost 2% from the top. Still not enough. Previously, we had a 3% less than that. Now we have a 2% less than that. It's enough for such a ferocious rally. So it's a 0.35% flat red retracement on the on the Nifty, and rather bigger one, nearly 1% for 73 points retracement from the Banknifty. That's what it is. And we know that it's on the top. There is some kind of an M pattern, double top pattern, which is, if confirmed after the 47,000 is breached, could go equally as much as the height. That means it could go as far as 46,000 if that is confirmed. So that is there. It's not confirmed. Remember, double top is not confirmed, but it's absolutely clear that 3 days consolidation has broken out in the Nifty, and a bearish pattern of evening star has confirmed yesterday itself, and it is reconfirmed and completely done with a wide range bearish candle on the Banknifty. Right. So to look at the levels on the top, it's all-time high 21,834 in Nifty, first resistance. After that, major one is 22K. Downside support first now can be at 21,500 nearby zones, which is a gap support. If that is breached, then 21,230 is a 20 exponential moving average. 21,100 is a 23.6 Fibonacci retracement level, and 61.8 Fibonacci extensions level. So that 21,000 to 21,230 is a very good support zone that can be looked for the next day. Then Nifty, the first support will come in at 47,350, and next will be 47,000, which is 23 Fibonacci retracement. And that's in confluence with the Fibonacci extension level of 47. So 47,000 to 47,350 is a very good short support. If that is breached, then the next one will be 46,500, which is a gap support, and after that 46,000 will be the major 50 exponential moving average, and a confluence of 38 Fibonacci retracement, 61 and 50 Fibonacci extension level zones. Right. So that's how that's all levels. So let's just quickly wrap up. Yeah. So we have talked about all those. So it had a bigger cut on the Banknifty and a small recovery in the Nifty after the retracement. Right. Overall, between 1 and 2%, less than that, is where the retracement has happened. Right. So what may be expected, but look at intraday price action. It was trending down, especially in the Banknifty. Nifty also was trending down, but Nifty trying to recover in the afternoon. Did not succeed fully, or at least it went halfway. Half of the pullback was bought in on the Nifty, but the Banknifty, it was ferocious selling. Right. But selling happened was from the DIs in the cash market, is what it indicates. Because Fyers are surprisingly biased today. Yesterday they did not buy. First day, second day of the year, they bought. So institutional money is still flowing in, is a positive thing. Institutions has been green on November and December especially. even on the last day of the year, they are heavily buying, and there is some console. So market is basically getting into consolidation. So levels we already talked about. I'm not repeating that. Momentum is still bullish, but there is a positive reverse divergence, bullish in nature from the bank Nifty that is seen. Negative divergence is still there in the Nifty. Does not matter touch it. More downfall can be expected in the Nifty. Momentum divergence in short-term daily charts, what we are talking about. But otherwise, momentum is bullish, still intact on both indices. VIX is flattish, less than 0.7%, down against 14.58. So it's in the brim of changing, shifting into a new volatility regime, looks like. But the implied volatility versus the realized volatility spread is somewhat not great, but somewhat in the mid-range that may be in favor of the option sellers at this point in time. Bollinger bands are contracting, uh, and it's very much evident on the Bank Nifty. Bollinger bands have a sideways consolidation. If you just quickly go and have at the Bollinger bands, you can see that right, it's contracting. That means sideways consolidation in this within this range. So more contraction has to come in the Nifty, but in the Bank Nifty it is very much evident, and it can be volatile within this range, 46,000 and 48,500. Then it can be volatile within that. As long as it is moving within that range, it is still consolidating. But Nifty, still that expansion is not very much evident. It's only the beginning of the expansion. It's only the beginning of the contraction. Sorry, because the expansion is still not finished yet. Although it has begun the contraction, as you can say. So that's it. So technically the charts are still bullish, no doubt about that. Momentum is bullish, trend is bullish. Hardly any correction has come in, that's the only problem, and which is still very close to the 15. So two things you have to be cautious about. The flag pattern, momentum divergence, breakout happened, but that breakout is half done with. Right? It didn't work out. The flag pattern breakout at the very top didn't work out. Some caution has to come in because some correction is due, is what it looks like, as I had been telling you all this previous 2-3 days. But it was consolidating before it broke down today slightly. More may come in, is what I feel. So of course the major sectors, industrial sectors, if you see it's red today, except for the metal and the government managed close. But from momentum bullishness in the short term perspective, all the sectors are still bullish, absolutely. Across the sector bullishness in momentum is still there, no doubt. But heavyweight industrial, some red is seen, except in the HDFC Bank and Reliance, which managed to close green. That's what happened. So buying happened, the Fyers in these two. We'll have to understand that way. US indices have shown some red after hitting the all-time highs and then breaking out just like ours. Dollar is spiking up, right? Rupee also is very weak. Some green spike is there in that also. 83 plus. Crude oil is also spiking from the bottom because of some shipping issue probably. But it has fallen substantially near to the 70 levels and again spike up to 72.75. Gold is not falling down, it's consolidating, but it's spiking up again. Looks like it may be heading to all-time high also. So this may be time for bottom, buy the dips, maybe opportunity to buy SIP, quality investment stocks for every dip. May be possible now when market traces, right? Investing when it spreads out. So that's regarding the investor. From the trader's point of view, the direction is very clear as of now. It's still not changed. It's not completely sideways yet. Direction is very clear. Once it's completely sideways, you can say direction is not clear again. Right? Direction is clear. Still, go for the trading strategy which are directional. May work. No directional. Difficult to work if market is trending. Because both the indices get into pure sideways consolidation, confirmation, absolute consolidation. Only then it makes sense to have an analysis. Whether it's sporadic breakouts, multiple breakouts with a huge buying even on December multiple times in a month, then we have trouble detecting the direction. Right? Not trouble detecting the direction, trouble selling, option sellings on doing non-directional strategies. So shift to directional strategies, go for option buying and all that, it may work. whenever the direction is clear, right? The moment the direction is not clear, or direction is turning to sideways, so let us check on it. So tomorrow is the Banknifty weekly expiry. 46,500 and 48,000 is what the open interest is, right? PCR is not bullish; it's bearish actually. 0.51 more bearish than Nifty, which is 0.76 or something. So open interest was short build up, that is there. So overall bearishness is there in the options data, which indicates that more falls can come in. 48,000 was a major zone of support that is breached. Now 47 can have a good support before it takes support at 46,500. So 47,000 has confluence of support, so you can take it as a good support. But the wide level is 46,500 and 48,000 for the next day, right? That's all I have. If you're not subscribed and watching this, please subscribe. Please subscribe and share different colleagues so that it reaches out the maximum. And that's all I have. Hedge your positions, don't take overnight risk. Our market is having more volatility. The gap ups could wipe out your capital, so have hedge positions always. Always you can use the option strategies for cash secured and cash covered calls and all that. Can give you rental income whatever way the market is moving. So check on my playlist for that, videos on that. And yeah, cut short a position size if it is hitting the 20 weeks. So right now it's not time for that, but yeah, manage your risk is all in our hands. Have tight stop losses, have hedge strategies only when you're playing with derivatives and options especially, right? That's all I have. Thanks. Happy trading, happy learning, happy investing. Bye bye.